Welcome to TradeTheMBI.com. This is John. This report is for the 18th. Well, the Fed finally did it. Popping quarter point. Whew, the excitement. Everyone was thrilled, and the market faded off of that news because you sell it now. What I pointed out to you the other day was on our team chat, whatever the Fed day is at the close, you get the opposite reaction the next day. Well, lo and behold, look at futures way up, and the percentages of that trade are known, pretty clear. Not many people actually understand it or even talk about it, but for anyone who's done the statistical analysis and taken the time, and that's what it takes, it's a lot of time to see these correlations. It was pretty high percentage return yield on fading the close of whatever yesterday was into today and going the opposite direction. And sure enough, it's a pretty strong move already. So, buying call options at the end of the day for a down day or put options if it had been up, either one would have worked. So, just happy to have pointed that one out to you. For those on the team chat who saw it, just to let you know. Treasuries, no big surprise there. In fact, now that that's been known and how relatively modest it was, you had one dissenting member, so not a very big deal as far as that goes. It's not going to save Powell in any way, shape, or form, but whatever. I think that was just about trying to take some of the pressure off. Didn't help any, no. It is what it is. From an oil standpoint, we're still caught in this same range, and that seems to be what I talked about a while ago, where we would find where the inflation-adjusted min was, and this low 60s seems to be the range. Is it enough to really produce economic boost? No, you really need that excess where it drives lower because of excess production, even though the crude bill was very large. Still relative. So, that caused some people to fade out of the euro who thought there might be a bigger move, but they're still excited about being in that because they're on war footing, and that means lots of spending in euros. So, people are going to need euros to do that, and they're going to be borrowing a lot of them. From a gold standpoint, first started out weakness, but it's recovering from that because at the end of the day, deficits aren't going to change. This doesn't impact how much interest is being paid in a real significant way. None of that changes for the most part, but it's solid. Crypto continuing its continued move back towards their highs, and it's all going to be relative to how economic slowdown, and of course Bitcoin is traded relatively clean to the Nasdaq, if just slightly off proportion. And you'll still continue on that thread. Of course, the regulatory item of that is still going to continue. So I took the short from midpoint with the MBI white clearly above the 25, and the strength of that was pretty straightforward, even though you had some counter move with slight magenta increase there. Wasn't able to do anything over the 25, and it imploded right after that. It made the zero move, and actually created a new step on that, but it was bought up pretty darn quick, and it just filled back into the positive extremes, going back from the original breakout moment that took place back on the 11th. So that's where we are with it, and pretty strong move. And of course, it's going to catch a lot of people wrong-footed, but from the micro intraday, you can see it was a sloth move, and then there was the immediate excitement, and then everything faded, and they used that fade right at post-market to begin to buy it all back up. And here you are, European session on fire. That's the long and the short of it. It was a pretty straightforward call. Didn't require too much heavy lifting. As always, though, anything relevant like that, I will certainly put on the team chat ahead of time so you can see it. But all in all, good stuff. As always, trade well. Have a good one.